This is Ruskin Felix. I'm here to explain things about the stock market, aspects about the stock market, an overall understanding uh, of what the stock market is. This particular video is about the basics of stock market. So this is for someone who has not actually been in the market or hasn't actually traded for a while. There are also some aspects that I'll be detailing out for people who are experienced in the stock market. So this is like a video for all of them and not just a particular section of the community which is just initiating in the stock market. Coming to things about me, my name is Ruskin Felix. I am a qualified chartered management accountant from CIMA UK and a member of AICPA US as well. I was working in the investment banking industry for a lot of years. I have experience of managing portfolios, managing investments, handling HNIs, and different kinds of HIF, AIFs, and mutual funds, and all these kind of things. So a lot of experience that is basically helped me to understand what the stock market is and how it works over the period of the last 10 years. And I would want to somehow share this learning with all of you. And yeah, that's quite actually the point of these videos or the videos to come. This is actually the first video, but there will be a lot of them. Now in this particular video, I have actually sectioned it into 3 different sections or parts. Why I've done that is just so that there is some kind of a continuity, and because the concepts are a lot and I will not be able to cover them in one video, I would want to talk to all of you in as much detail as possible, because as my forefathers and my teachers have always said, it's very important to create good foundations, because that's what leads to a good overall understanding of how the stock market works, which at the end of the day will lead to you making more profits. So it's just how it is. Now, in this particular session, what we're going to cover is the introduction to the stock markets. Now, some of the basic aspects that we're going to cover is how or what is the concept of a stock market. Essentially, because it has the word market in it, there is definitely an understanding that there are demand, there is supply, there are buyers, and there are sellers. And between them, people who help in these transactions are intermediaries, everyone in between, essentially. Now, I will also help you understand the basics of how the stock markets initially had started, the biggest exchanges that you would want to trade, not just from India, but from any other part of this world as well. What are brokers, what are depositories, what are the major players in the market right now, so that you can choose one of them based on the transaction fee and all the other so-called charges that are there, and what kind of type of investor or what kind of investor do you want to become, what kind of investors are there, so that you can understand what do you want to become after having some kind of an assessment. An overall general warning, investments are risky, and so you need to have different sources of income, number one, and you need to understand the amount of risk that is there, and only then you'll be able to make good investments, because otherwise you're going to lose all your money. Believe me, that happens to a lot of you, and I know this because I've had a lot of experience myself and among my peers, where we have seen a lot of people losing money in one of these downfalls of the market that happen. So try not getting stuck into that, try not to be greedy, and yeah, so here we go. Thank you. Okay, so coming to the topic of the concept of stock market. Now, a lot of people are always looking at these green and red signals, and they're like, "Oh, I want to invest in these stocks, and I want to make money and everything." The first thing that they need to understand is, what are the basics of the stock market? What is the stock market? A lot of people, for example, don't know that, like for example, the points that are there in the stock market indexes. What are those? Why are those in points? Why are they not in rupees or in a particular form of currency? People don't know this, that all these indexes are built on a form of indexation, which, if people in mathematics don't know, it's basically when you consider one year as a base year, and then the stock market particularly grows. So that means if the stock market right now is 15,100, there is some year where it was at 100. That's the base year for that index. People don't know the base year, people don't know what 100 is, people don't know what 15,100 is. They just invest. And that's stupid. So, Coming to the concept of stock market, as I said earlier, a market is by definition something there where there are buyers and there are sellers. Now, obviously, in this kind of a stock market, there are either sellers or buyers, but what are they buying? What are they selling? It's basically trading commodities, it's basically shares, debentures, all kinds of OTC products, currencies, bullion, commodities, these kind of things. So they're here for a particular purpose to come and trade a particular commodity, which can be any of these investment products. And so there is a demand and supply mechanism. Now, I will be drawing this out to you as well, but essentially, what is happening is there are some particular buyers on one side which are wanting to buy a particular security, say for example at 100 rupees, or say for example 90 rupees. Let's just say there are two buyers. One is wanting to buy at 90, the other is wanting to buy at 100. So the average price that they want to buy it as at is 95. Now there are some sellers as well at different prices, and what the stock market does is essentially order matching. Now, order matching means that there will be some sellers who will be wanting to sell at 95, there will be some buyers who will want to buy at 95, and the exchange or the trading platform basically matches that order and gets that share transacted from one party to the other, that means the seller to the buyer. So this is the demand and supply mechanism. To anyone who reads economics, you would know why the prices come up or come down. Because of higher demand, the prices will go up. Because of lower demand, the prices will go down. There will be selling, and so it depends on the number of the buyers and sellers on either side, on which side the market will move or the particular stock price will move. So this is something that you need to understand just as a concept. Now, about the history, about how it started. Now, the initial most important thing to know is, from an Indian perspective, Bombay Stock Exchange is the oldest exchange. It is not the National Stock Exchange. People don't know this, that Bombay Stock Exchange is actually the most important and the oldest exchange in Asia, because it was started in 1875. It is the first exchange in Asia. The first exchange documented in the world is the Amsterdam Stock Exchange, which is in 1611. The most revered and most renowned is the London Stock Exchange, which is also in 1801. And there were a lot of other exchanges which opened, including the NYSE in 1817. So now, why were they opened? We need to understand why in this era of industrial revolution is when these exchanges opened. It is because of the concept of economies of scale and the concept of expansion of businesses. At that time, there were businesses who were doing well, for example, in the fuel, in the railways, in the coal mining industries, and that is when, or in the factory production, say for example, now, that is when they wanted to expand to other countries so that they can increase their production of supplies or of goods and then make more profits. But for that, they needed more capital. Because they needed more capital, they thought that it would be the best form of investments if people would invest into companies. And that's when people started making public limited companies. And that's when people started taking investments from normal general people or general public. So, the most important reason of a stock market is to raise capital. It is not actually about trading, it is about raising capital. Trading is the secondary market operations of a particular market. Now, the Dutch East India Company is the first company that was actually a public limited company and which had issued stocks general public to the general public. And they are the people who actually understood short selling as well, which in this case is basically, I would come to this concept when I'm covering technical aspects of a company or of trading or of options, for example, because that's where short selling is usually taken into account, because earlier there weren't any instruments that you could short sell with. Now there are, and that's when you can make a negative position on a stock as well or an index as well. So that is something that we need to look at later. One of the books that I would want you to read is the initial concepts that were mentioned of the stock market in one of the books. That was Confusion the Confusions. It was actually published in 1688, and That book is going to give you a basic fundamental analysis of what the stock market is and how it has actually transitioned from one to the other and now into the behemoth that it is right now. Now, so coming to the evolution, there is a certain sense of evolution. Now we understood that why these initial stock markets were there is for the expansion, because there were expansion needs. Now, from there, you actually see that because there were expansion needs, you needed more capital. And for more capital, you needed to come to the IPO or the primary market of the stock market. Now, this is where you need to understand that the moment I am investing in a company, I want ownership in that company. That means joint ownership. And that is why the evolution of markets happened in a way where people needed expansion, the other, and that's why they needed capital. But people who had that capital would want ownership in the company. And that's when they started asking for shares, is when the concept of a market actually uh, fructified or became a reality. Now, in terms of the evolution of markets, I'd also want to say there are a lot of markets right now who have become $1 trillion plus. In currently, there will be around 16, 17 of them which have actually passed 1 trillion. Major ones are Nasdaq, the NYSE, even India, NSE and BSE. So Hong Kong Stock Exchange, the UK Stock Exchange. Now we will talk about development of markets, because markets overall have actually segmented themselves into different classes, asset classes. Now some of those asset classes, for example, are equity, where it is joint ownership in the shares. Some of them are debt, which is basically loan or anything that you have to pay back on an interest or without interest, but basically you have to pay back. Currency, which is a trading platform for all the currencies that are globally available. Commodities, for all the commodities including wheats, grains, nickel, all kinds of iron compounds, everything. Derivatives are basically futures, options, forwards, which are traded. People, you have to understand this also. The difference between forward and future is that future is tradable, forward is not. Concept wise, they're both the same, but essentially, forward is not traded in the stock market. This is, if you ask anyone, and if you ask or you are asked ki, what is, for example, the difference between forward and future, there's only one difference. For future is traded, forward not traded. Simple difference, please understand, please remember. Options are essentially derivative instruments which give you a right to buy something in future at a particular price, and similarly you have the right to sell as well, which is basically calls and puts. I'll explain them in the future in more detailed videos, because it's very complex and I don't want you to delve into that without actually knowing the stock market. मतलब पहले ये सब थोड़ा सीख लो, मतलब ठीक है. For people who understand Hindi, this was good. For people who understand English, first learn, then do. Don't do, then learn, because then you lose money. Cool. And last one, as you all know, is bullion. Bullion is essentially gold, platinum, silver, all these good things which actually go up when the world goes down. Every time you notice the world, whenever it will be in a problem, gold will go up. So always invest in gold when you think that there is going to be World War 3. Future prediction best. कोई ना कोई तो कर ही लेगा. अच्छा, types of markets. There are some types of markets. One is primary, everyone knows, but I'll still tell. Sorry. Obviously, you're here to ask and answer and know and learn. But okay. So primary market. Primary market is essentially where people are raising funds. Now, I have told you that people in the market are here to raise funds. That means if you're not raising funds, there's no point of the market. So the primary market is where you actually come and raise funds, where you, as in the company, from whom? The people. Secondary market is where now a particular set of people have these stocks or have these ownerships, joint ownerships. There are some people who want to buy it at a particular price. I told you that demand and supply thing. This is where it actually comes into the picture, where I want to buy some company's shares, but it's already owned by someone else. So I'll have to buy it from him, and that's where It is basically a trading platform between already owning company shares people and people who are now wanting to own, basically. Over the counter market is a market that I would want to really focus on in the future, because over the counter market has all these non-listed or unlisted shares and companies which can be traded, but you don't know about it because they're basically traded on an over the counter OTC market. For example, shares of NSE, shares of Paytm, which is a big payment wallet in India. So Paytm is owned by 197 Communications Private Limited. Now, you might know the difference between a private limited company and a limited company, public limited company, but just I would not explain that, but I'd just say that even in public limited companies, there's just 1% of companies overall in India which are actually traded on the stock market. So where are the other 99%? If I want to buy that, where do I buy it from? Some of those companies which are doing well and want to be traded are being traded on the over the counter exchange. So it's not like you can only buy what is on the exchange. You can buy what is not on the exchange also, provided that those stocks are tradable and adequately liquid. So you need liquidity, right? Because if you want to buy, someone is wanting to sell, someone should want to sell. If they're not selling, what will you buy? So that aspect you have to understand, and that's why OTC market is a very big market, because it has all the companies which are not listed, private companies, public unlisted companies. It's a big market. Even the NSE, which is a big IPO that is going to come, was planning to come for a lot of years, but due to its problems it has actually delayed. But now that it is coming, it is something that you need to see overall as to, if you want to buy NSE stock, if you want to buy Paytm stock, where do you buy it from? If you want to buy Chennai Super Kings stock, that's where you buy it from. If you want, I can give you links as well, and I can, because we trade in unlisted shares as well, my company does, and I can give you links on that. But yeah, CSK, if you want to buy MS Dhoni's company or the company that owns CSK, that's where you buy it from. Okay, currently it's around 56 rupees a share. Currency market is essentially, I've told you, it's basically where the currencies are traded between parties, between international parties. So it's a big market with a lot of derivative sense and an ETF sense in it. There's no cash market, so you have to understand it's quite risky as well in comparison, because currencies don't move 5-10% every day. They're very stagnant. So because they're stagnant, because they're kind of stable, the people who are trading in it are basically trading on futures or a very big debt laden position, which is basically like a highly debt oriented position. So because of that, it's quite risky as well. You have to understand the currency market to actually trade in it. Commodity market is somewhere where we are dealing with all the grains and all the different kind of instruments and different kind of grains. So even oil, for example, is traded in the commodity market. People need to know before trading the commodity market that you need to compulsorily take delivery of the commodity derivative products that you buy. So think before you are taking or buying, because you will then have to buy the whole margin. I'll come to this when I'm talking about this later, but essentially it's just a warning example. If you're seeing this video and maybe you don't see these other videos, you should actually please subscribe. But if you don't, uh, commodity market is somewhat risky right now, and that risk has now permeated into the normal market as well, because now SEBI's ruling is also that you have to take delivery for all the in the market contracts. I'll explain on that as well, what is in the market and out of the market. But essentially, anything, you'll have to take delivery of stocks that you would want to buy or you have given derivative contracts for. So be very careful now. This is a new ruling. People don't know about it, so they'll buy, and then bank will credit, or a bank will actually debit all that amount, and then you'll be like, why is the bank debiting? So understand why they debited. Okay, bullion market is where gold, silver, platinum, these kind of rare metals are traded. It's a very important thing as well. You need to understand it. And so, yeah, this marks the session end. And now I will be actually taking the next course, the exchanges that are there, the indexes, formation of these indexes, what are the stocks and how are they selected. The link is provided, and please come and see the next video. See you, take care, have fun. Don't invest without knowledge. Invest a lot with knowledge. Best of luck. Please subscribe. You need to do that. Okay, bye. See you. Take care.